Hello everyone, welcome to Smart Investing. Today is April 10th. It is 9 o'clock on the dot a.m. Today's video is going to be about the banking services sector. I only have one stock for you. This is going to be a very short video since I'm only evaluating just one company. I'm a little bit uncomfortable, so let me just adjust myself before I begin and stuff. So ticker symbol MBINN. We have Merchants Bank Corp. So with Merchants Bank Corp, we're gonna look at the first page. So market cap is at 124 million. Volume is pretty low. We have here the 52-week high and low, a range of at least 10 bucks. Not really, close to it. We have earnings per share 5.64, dividend of 1.5, dividend yield of 7.23. That's pretty high. Those earnings are pretty strong for a market cap of that size. So let's see the fundamentals later on. I'm curious to see how they're doing fundamentally. The chart we have is the 5-year. So we have a low of about 15 and change, and then we have pretty much going flat at around 21 and change. So 15 and 21, pretty much a $6 difference. Not much of a difference. You see a bunch of volatility from 2022 and then going into 2023. Then the start of 2024 pretty much has been an uptrend, and then it's just flat. So we want to take a look at that. Actually, sorry, 3 months. So pretty much it went up, and then you have periods of it going down, but you have the range of about only $2. So I still see that as pretty flat. It hasn't broken into new highs or into new lows. So again, you have that $2 range going into the 3 months. So pretty much the first quarter. Let's see what the analysis says. So it looks like no analyst ratings on this. That's what I have on my end. We have the highest rating is momentum. Can't say I disagree with that because markets are closed right now. They'll open in about 30 minutes. But again, I could be wrong. I don't really see this stock as income. I've seen better income stocks than this. Growth, I'm not too sure. So quality, I'm not sure about. And value, I'm not even sure about. So we can only go off of what we have. I apologize for the noise. We can only go off of the information that we have. So quant ratings, it also says a 4 out of 5 overall rating. I'm not sure if I agree with that. Looking at some tech analysis, just basic. Short term is telling me negative sentiment, and then medium term negative sentiment, and then the long term is telling me an uptrend. So for the most part, 7 people are bearish, and then for different kinds of interactions and indicators, is saying 4 is bullish, 7 is bearish. It's just flat. This is the range that I see here. Yep. So that's the range that I see. Just stuck in that channel. So moving on to the fundamentals, we're gonna look at some fundamentals real quick. Let's look at the dividends, which I really don't show too much. Kind of skip over that usually in my past videos. 37 cents. We see here ever since 2021, they've been paying a dividend, and they haven't given any raises for their dividends. Not even quarter to quarter, not even year to year. I don't really like that. Again, to each their own, but that's not a stock that I would get into, especially for an income portfolio, just because the yield is high. That's like the last factor for me to analyze and evaluate a company as to consider it good. Now let's look at the meat on the bones here. So I always put GAAP. I like to see guidelines and practices when they're doing accounting. These are non-guidelines for accounting practices. I always like to use the guidelines for that. So earnings results here we have from, well, it's not giving me anything for 2024. Sorry, for 2023. And then, yeah, it's not even giving me no future forecast or predictions for 2024 for Q1 at all. So this is kind of old. I like to look at annuals. So ROA 1.89. So I do have 2023 numbers. So that's supposed to be a check mark. We have here 2% on ROA. That's pretty high for ROE. Obviously, in the $5 range for the earnings. Net margins are at 50%. Wow, that is insanely high and insanely good. They must be doing something right. Probably cash flow or something. Debt is at 90%. Well, 89.9 and pretty much 90%. It's pretty typical for a bank. Net income is at 279 million. So I'm going to use that 279 million and then look at the cash flow. So financing is at close to 4, so 3.97. Then we have 3.26 for investing, so that leaves us with let's see, 71. So they have, let me see, 350. So about 350 plus 280. Giving a rough estimate. So 640 million is their take-home pay, pretty much, combined with cash and net income. So they are definitely cash flow positive and net income positive, two big factors. And then their revenue has been growing, which is considerably good. Just because of the market cap, and Wall Street doesn't like these very small caps, I'm going to say no to this stock. But if this company continues to be good, I'm telling you, in, I say, another 5 years, this is a company to keep an eye out. It's hard to keep an eye out a company and wait for it and sit on it for like, the next 5 years. But this company does have potential. It doesn't need any work or anything, but it just, it just needs to continue the good momentum and all that. So that's all I have for you guys. Thank you guys for watching. I'll see you guys in the next one.